Hi, I'm Steph Story. I'm a consultant at PSE Consulting. We are a London-based specialist payments consultancy, and today we are going to be discussing the digital euro and why we think it's a ghost story in a very timely fashion for Halloween. But just a bit of background, the European Central Bank recently published a report on the future of the digital euro, and I'm very happy to have my colleague Tom Hay here with me, who will also be happy to explain why he thinks it's such a terrifying topic, but perhaps we can do a bit of an intro, Tom, first.
Yeah, thanks, Steph. I'm Tom Hay. I'm a senior manager here at PSE. I've been working in the world of payments for many, many years, and so I've taken a great interest in all of the payments innovations that have happened. The digital euro is certainly an innovative idea, and maybe I'm just a bit of a wimp, but when I read the report, it certainly scared me.
Fab, thanks, Tom. So maybe we could start with the question of what the digital euro actually is.
Sure. Well, there's a clue in the name. The digital euro is a digital version of the fiat euro, the currency that is issued by the European Central Bank and backed by the European Central Bank. The digital euro would also be issued by the ECB, and it would exist in parallel with the current fiat currency. And although it's issued by the ECB, it would be distributed by commercial banks, the high street banks that we deal with today, and it would exist and run in parallel with the fiat currency. The difference is that the digital euro would exist only in digital form, and it would, although the ECB has been a bit evasive about this, they're talking about a cryptocurrency running on a blockchain. They're using terms like unspent transaction outputs, which are very definitely associated with cryptocurrencies. And people would exchange these digital euros either via their banks or via an app that the ECB is going to issue. So people would pay each other using the digital euros electronically.
Great, and I think they're being a little fuzzy around the crypto aspect, just to not to scare anyone too much. But I think the problem a lot of people have is understanding that we can already make electronic euro payments via bank transfers and card payments. So why would the ECB want to introduce a digital euro?
And that's a really good question, Steph. Yes, of course, we can already make payments electronically via euros, and that can be done either using bank transfers, SEPA or SCT Inst, or it can be done using card payments. So digital euros are not going to solve that particular problem. That's a problem that's already solved. So the question is, why then are the ECB pushing for a digital euro? And I think there are probably three reasons why they're actually doing this. One is the fear of big tech launching their own cryptocurrencies. There are lots of cryptocurrencies out there, Bitcoin and Ethereum and Dogecoin, and hundreds and hundreds of them, but they're fairly relatively niche currencies. But a couple of years ago, Facebook was going to launch a currency called Diem, which would have been a stablecoin backed by a basket of currencies, and it would have been usable across the world. Now, when central banks see that kind of initiative, they get concerned that they are going to lose their power to control the money supply, and the control of the currency will be taken over by big tech. So they need to legislate against this. The second reason that the ECB is interested, I think, is fear of missing out. Although Bitcoin has very much fallen in popularity, the idea of blockchains and cryptocurrencies on blockchains is still very current. And central banks around the world are experimenting with or issuing central bank digital currencies, CBDCs, as they're called. The use of blockchain is being pushed by technology companies, private equity companies have invested a lot in it. They're very, very keen to push banks, and particularly central banks, to use this new technology. And so this is the second reason why the ECB is doing this. The third reason, I believe, is it's yet another vehicle for the ECB to push a pan-European card scheme. For many, many years now, the European Union has been concerned and upset that the card rails are operated by American companies, Visa and MasterCard, and they have tried on multiple occasions to launch a pan-European card scheme, the most recent one being EPI or EPI, perhaps I should pronounce it. That went off the rails, the payment rails, so to speak, and has morphed into a digital wallet scheme. But I think there is still the yearning there for a pan-European card scheme, and that is one of the things that a digital euro would provide a vehicle for entry.
Yeah, I think FOMO is a huge one. They want to jump on the bandwagon and don't want to get left behind, but also in terms of competition and acceptance, it seems like the only way to compete with Visa and MasterCard in their eyes is to go down this route. Okay, so it's obviously quite a cynical view, but there are surely some benefits that that they're thinking about.
Sure. Let me run through the benefits that the ECB claim in the report that they are looking at. And as you say, I'm a little bit of a cynic on this, so I will add my spin to their reasons. So the first thing that they say is, look, this is central bank money, and so it's risk-free. Well, that's great, but euros are also central bank money, so you and I might have thought that they would be risk-free as well. But the fact is that the electronic money, the electronic euros that we use from commercial banks are so-called commercial bank money, and there is a degree of risk associated with that if the bank goes bust. Of course, the Europe as a whole can't really go bust. So that means that the digital euro carries less risk than commercial bank euros. Interesting. Rather than reinforcing my belief in digital euros, that might slightly undermine my belief in commercial euros. But anyway, let's move on. It's because it's central bank money, it is going to be legal tender, just like cash, and therefore the same rules of universal acceptance will apply. So anywhere that I can use cash today, I will be able to use digital euros tomorrow. So shops, online, can be used for person-to-person payments. The digital euro is supposed to boost European autonomy, and we already talked about this a little bit. It is a protection against commercial stable coins. It's supposed to foster innovation, and the kind of things that are talked about in the report are account number portability. So the idea that when I change banks, I can take my account number or my IBAN with me, just in the same way that when I change mobile providers, I can take my mobile number with me. Now, of course, that's not inherent in the digital euro. The two things can be implemented completely independently. But I think the ECB sees an opportunity if they're introducing a new payment rails, why not introduce some of these other innovations at the same time?
Yeah, I mean, if you're building a whole new system, you may as well build some exciting functionality into it as well.
Well, indeed, you pretty much have to, because otherwise people are going to ask the question, well, where's the improvement? You know, we used to have this, we still got that.
Yeah.
I don't see any improvement. What else are they claiming? They're claiming that it is going to be inclusive, that everyone can have a digital euro account. And
I think just to play devil's advocate there, by sort
yeah.
of financial inclusion, surely if you wanted to use the digital euro, you would still need proof of address, or, you know, all the things required for onboarding a customer that we currently have. So how inclusive, you know, would that be?
Well,
And what do you think
it's a
it's
good
for?
question, Steph. Yes, digital euro accounts are going to be called digital euro account number DEAN as opposed to an IBAN. You are supposed to be able to get a DEAN even if you don't have an IBAN. But as you say, a bank can't just accept someone who wanders in off the street and says, I want a DEAN, I want a digital euro account. They're going to have to do the same kind of identity checks that they do for current account, for existing fiat accounts. So not quite sure how that's going to work. There is one aspect where digital euros would be quite different from fiat euros in that they can be used for offline payments. So you can store digital euros on a mobile device, assuming that it has the appropriate security chips in it, and make payments using that. And so I suppose that if I have one of those devices, then I can receive digital euros on my device without actually having a backing bank account, and I would be able to pay from that device. So that may be one of the ways of achieving inclusion. Digital euros are supposed to be free for use for consumers. I think we live in the UK, so we are used to having free banking, i.e. we don't pay for our payments as individuals. Businesses do pay for their payments. I think some banks in Europe do charge consumers to make payments, but the digital euro, one of the conditions will be that it is free to use. I've talked about its usability offline, but the consumer has to have a device that will actually support the required security for the digital euro. Another purported benefit is instant settlement to merchants. So if I make a card payment to a merchant, they do not receive the money same day, they receive it next day. So it's usually T+1 settlement from the acquirer to the merchant. So digital euros, because it's across a blockchain, would be instantly settled. Now that one seems odd to me because the reason for the T+1 settlement is not technical. It's not because money can't be transferred instantly today. It can. There's SCT Inst, which will transfer value from one account to another instantaneously. There is a reason why acquirers aggregate money for merchants and pay out on T+1. So again, instant settlement is not really solving a problem that currently exists. The final benefit that is quoted by the ECB is privacy. So although it's not anonymous, the digital euro blockchain is supposed to be pseudonymous. So your personal details will not be available on the blockchain. However, there is some small print associated with that. Banks still have to do anti-money laundering checks to make sure that people are not making payments to criminals, terrorists, or whatever, or making payments for reasons that they shouldn't be. So there has to be some ability to check identity of recipients of funds. So I'm not so sure about the privacy benefits of the digital euro.
Sure. I think there are obviously some interesting use cases and benefits that they're claiming, but at this stage, it seems like it's easy to question them. I suppose the thing we've kind of been waiting for is why we think this is such a terrifying topic and what we're going to expect.
Aha, you're waiting for the ghost story. Okay, let's get on to that. So what are the bad things about the digital euro? The first one is that it's not interoperable with other central bank digital currencies, but in that it's not unique. Countries seem to be developing CBDCs in a balkanized fashion, so they will be usable within the country but not cross-border. So instead of solving global interoperability, CBDCs are reinforcing it. But there are some issues which are more specific to the digital euro. One is who can hold digital euros and how much they can hold. The proposal at the moment is that only EU residents can hold digital euros. Individuals can only hold one digital euro account, and the amount of digital euros that they can hold in that account is going to be restricted. And incidentally, that means there will be a central register of all digital euro accounts. So, Steph, if you went into a European bank and said, I want to open a digital euro account, they would first have to check whether you already have a digital euro account with another bank and make sure that you close that one before you can open the new one. The amount of money that you will be able to hold in your digital euro account is going to be limited. And the way that they want to achieve that is by means of something that they call waterfalls. So your account will be linked to a normal euro account. And if you receive a payment that would take you above your digital euro limit, then those digital euros, your bank will automatically convert those into normal fiat euros and credit them into your associated IBAN. Likewise, if you want to make a payment from your digital euro account, but you don't have sufficient digital euros in there, your bank will automatically convert from fiat euros in your IBAN into your digital euros in your DIN before making the payment out. Now, that all seems quite complicated and perhaps unnecessary, but the really weird thing and the heart of the ghost story is the fact that businesses are not going to be able to hold any digital euro funds at all. So they can have digital euro account numbers, DINs, but they can't hold any money in it. So if I were a company and you, Steph, were a company and I wanted to make a digital euro payment to you, sure, I can instruct my bank to pay from my DIN to your DIN, but behind the scenes, what's going to happen? I can't hold funds in my DIN, so my bank is going to take normal euros out of my IBAN account, convert them into digital euros. They will, for an instant, notionally appear in my digital euro account. They will then fly across the payment rails into your digital euro account. Your bank will say, wait a minute, Steph's a business, she can't hold any funds in her digital euro account, so your bank will convert them straight back into fiat euros again. So it's essentially an IBAN to IBAN transfer, just as I could do today with SEPA Credit Transfer or SEPA SET Inst, but there has been this ghostly appearance of digital euros. Why? Why is it needed? It's scary.
Yeah. So actually, fiat, or the traditional euro as it is, isn't made redundant by this digital euro payment rails. We're still using it, and businesses will still see the same transfer.
Exactly right. And so why on earth does this thing exist? Because it's going to make things more complicated for all the parties involved in payments. So it's going to be legal tender. So merchants will have to accept digital euro payments as well as fiat euro payments. So that makes things more difficult for them. It's another thing that they have to offer on their websites or at point of sale. Can you imagine you go and you're going to make a payment, you want to make a digital payment or do you want to make a normal payment? So it's going to be more difficult for merchants. Acquirers and issuers are going to have to connect to two sets of payment rails, the card rails and the digital euro rails. They're going to have to manage two pools of liquidity, the normal euro liquidity and the digital euro liquidity. It's just going to introduce additional costs for all the participants in payments chain.
Yeah, it makes complete sense. And I think if you're trying to simplify things, then the digital euro doesn't seem to be doing that on its current path. But I think it's good to think about how acceptance and how acceptance players and merchants are going to need to think about it and the complexities that it will bring. But in terms of the future, what are we going to expect in the next few months or years?
Well, the report that you mentioned marked the end of the investigation phase of the ECB's digital euro launch and the start of the preparation phase. Now, they're saying that this is not a done deal. They're still talking about it. It's not certain that it will be launched, but preparation certainly gives the impression that there's a fairly firm plan and to launch this. What I would say is that merchants and other people who are concerned about the implications of the digital euro and the costs associated with that should get involved at this stage and influence the discussion. There's still an opportunity to influence the legislators and to influence the national governments. So yes, do get involved, make your voice heard. And if you think that digital euros are as scary as I think, then speak up now.
Fab. Thanks, Tom, and thanks for listening.